so it's recording. So let's start with this here. Okay, this is what I have next to me when I'm trading. It's just like a little checklist that I like to go down. So previous day bias, that's kind of subjective. I don't have to have that to take a trade, but basically I'll just look at a candle as far as a bullish candle or a bearish candle within the daily time frame and just have some sort of a bias. Nothing crazy. I'll take a long, I'll take a short, even if I'm bullish bias for that day. So next thing is important. So H4 opening price. So I use the 6 a.m., the 10 a.m., and sometimes the 2 p.m., just depending on how fast the morning session is. If it's super slow and we have some news in the evening or whatnot, or the afternoon, I'll use the 2 p.m. Opening and try and get a trade in. But otherwise, I'm sticking to the 6 a.m. and the 10 a.m. candle. So we'll get into this later, but short above, long below the opening price. Number 3, higher time frame, SMT. I use that as a confluence, not necessarily as a confirmation to a trade. So that's kind of how I use SMT. It's not necessary for me to get into the trade, but I'll use it as a confluence. Number 4, this is a must. So 90-minute cycle sweep or a 30-minute cycle sweep. We got to have one of those two things occur before I'm going to get into a trade within a macro window or at 10:30. 10:30 is a good time for reversal, as well as 11:30, because that's the end of the day for the European market. So 11:30 is the end of the day there. 10:30 is a good reversal point just for the U.S. equities. You just see that a lot in stocks, but primarily you want to stick to the macro windows. 15 minutes before the hour, 15 minutes after the hour. We all know those. And then number 6, the 50 levels and the 100 levels. So if you look on the right side, so like a 700, 750, something like that needs to be in play. It doesn't actually have to like be at that level or touching that level, but it needs to be in play, and I'll kind of show you what that means. Any questions on that? Yep. Oh yeah. Yeah, we're about to dive into that right now. Yep. Any other questions? Okay, and then let's look at this as well. So the order of reversal. So everything I just outlined is a framework, and then this here is how I determine an entry, basically. So I want to see these things happen in order, not necessarily D and E. They can be reversed, but I want A to happen, then I want B to happen, then I want C to happen, and then I'll get in at C. So you got to have a turtle soup. That's the first thing. It can either be a 90-minute cycle, a 30-minute cycle, a few other things I'll show you. An IFVG, that has to occur. Change in the state of delivery, which forms an order block. And that's when that occurs, that's the confirmation for my first entry. Fair value gap, either retracing back into it or a fair value gap that forms above the CISD. And then we have a breaker as well. So I'll use the fair value gaps and breakers to pyramid into the position. Even if it taps back into the order block, you can pyramid into that. Not so much on the IFVG. I won't really pyramid into that because that's going to be below the CISD. So I'll kind of let it play out down there first, and then I'd like to enter either at or above the change in the state of delivery. Any questions on that? We'll get into that more in depth with the charts as well. But this is, yeah, sure, go ahead. Yes. So CISD, I'll go ahead. Um, well, so when this gets confirmed, which I'll show you what the confirmation is for me for the CISD, then I can put in an entry. Not until then. And then the consecutive stacking of orders will come after that, which is how you get the really big wins. Any other questions? Okay. So let's go into a chart. So let's start with, so let's just go here. I think this is, yeah, so this is Friday, pre-market. So pre 9:30, I'll consider that pre-market, just because stock market opens at 9:30 here for us. So I'll consider this pre-market, but nevertheless, sorry, go ahead. I think so. Yeah, I think, well, yeah, the 7 a.m. So somebody was in this and then got knocked out. But this was actually a massive trade. Like if you caught it and held it all day, it's a big trade. But all right, let's get into it. So let's just go down the list. So H4 opening price. So 6 a.m. open. Okay. Crap. Let me delete that. All right, so 6 a.m. open here, okay? So the way I use this, and the way you guys should use this as well, even if you don't trade this strategy, you can trade whatever you want, to be honest, but if you're gonna trade a reversal, you wanna be entering below the opening price of whatever candle you're trading. So the daily, weekly, 4-hour, hourly. And what I mean by that is, so we open here and we go higher. I'm not looking to take a long anywhere above here. You don't want to look for a long anywhere. So that takes out 50% of the trade right there. So you're only looking for shorts, When I'm below price here, when I'm below the opening price of 6 a.m., I'm only looking for longs, no matter what. I'm not looking for a short. Because when you trade reversals, you trade the wicks. You want to be in a position at the wick. So basically, once it goes up here and crosses the opening price, that's the wick, okay? You're just going to assume that's the top wick, and you want to be in a short above that opening price. Because if you're down below opening price, why are you trying to short? Why are you trying to catch a reversal when it's already reversed and made the wick? So obviously this one comes back and that's not the wick. That ends up just being part of the body. But that's the theory and the mindset you want to have when you're looking at these opening prices. So let's go into it. So we're above opening price. So I'm only looking to short, and I'm only looking to short once we take out a 30-minute cycle high. So here, or a 90-minute cycle high, which is back here. Okay, one or the other. Doesn't have to be both. A lot of good trades come from 30-minute cycles. And okay, or a 10-minute cycle, but this is a little more in depth. I probably shouldn't have started with this. So you only want to look for a 10-minute cycle high to be swept after a 30-minute cycle high. So let's just ignore the 10-minute cycle right now and focus on 30s and 90s. So we get above the 30-minute cycle high, and at this point, once we cross through here, now I go to my checklist. Okay, are we within a macro window? Yes. 645, 715. Okay, that's a macro. Are we above a 30-minute cycle high? Yes. Are we above a 90-minute cycle high? Yes. So that's higher probability. Are we at a 50 to 100 level? Not quite. But what I meant by being in play is that the 50 level's here. You have 52, 48, 50 somewhere in the middle. So it's in play. We're around the 50 level. So that's okay. And then we go into the order of reversal. So what I showed you earlier, 1, 2, 3, 4, 5. I'd like to see all 5 of those steps take place. So we get above price here, we drop back down, then we get above price again. We tap into the macro here at 645. And then what do we do once we get above that high? We displace below this candle's low. Okay, we close below that candle's low. For me, that is the CISD. That's the change in the state of delivery. So right here, this down close candle there, that triggers my mind to say, okay, this is the high. This changed the state of delivery from buy to sell right there. And then after that, you can enter an order on that candle or wait afterwards and enter however you please. But we have all the steps here. So we have the turtle soup. Okay, we have the 30-minute turtle soup. That's all we need. We don't need the 10-minute. We don't need the 90-minute. So let's go with the 30-minute turtle soup. We have the IFVG. That's number 2 on the checklist. We have the change in the state of delivery. We have the breaker. The only thing we don't really have is a fair value gap. We do have a fair value gap created, but we don't tap back into it. But that's no problem. I'm still going to get in this trade. Okay, and then I'm going to look to stack in somewhere close to the breaker or close to the change in the state of delivery, either within a fair value gap or just right onto the breaker. And my first target is going to be 6 a.m. open. That's going to be the first target. Because even if I'm wrong, even if this is not the top wick, this is still a market maker model here. Okay, under these lows, that's a market maker model. Back to the 6 a.m. open, you can take profit right there. Or you can take it to the cycle low, okay? You can take it to the cycle low, the current cycle low. That could be your profit, or the previous 90-minute cycle low can be the profit target as well, okay? But what I want to the point I want to get across is that you're above the 6 a.m. open, and once you change the state of delivery, this is your high, okay? You put your stop above that, and you let it go. You don't trail super hard, okay? Once you get below the breaker and the change in state of delivery, if you have price come up and then trail back down, you can trail your stop to there, but if you're still messing around with this breaker and changing the state of delivery in that whole area, leave your stop there. Just leave it there. Any questions on that so far? Okay, so I'm going to enter on the close of this candle. My stop loss will be here, okay, above that high. So for me, really, here is the first time where we get some price action and then we get down below. So once we close this candle, we've made another swing point here, then I'll trail to here, okay? So as we're dive bombing through here, just sell, 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 yeah, you can trail it to here, no problem, and just let it go. But once we come up and make a new low, I'm down here. I've trailed it to there, but you know, at this point we're hitting the target. Any other questions on that example? Not as often, but in this case, it's higher probability. So like when you have the 30-minute sweep and then within that sweep, you get a 10-minute sweep. It's usually the first 10 minutes. So it's usually those first 10 minutes of the 30-minute cycle. If you get that sweep and then you do a CISD, that's extremely high probability. Yeah, but it doesn't have to happen. It doesn't always happen. I think between Friday and Thursday, this was the only one. This was the only example, I think. Yeah, not that much, but several times a week you'll see it. Any other questions before we hit the next example? Okay, so like I said, obviously this wasn't the wick. Okay, so we misread it. We still got a winning trade, but we didn't trade the 6 a.m. candle properly. So now we're down here, and we have the same thing happen. We take the 30-minute cycle low with this candle, which is also the 7 a.m. open candle, and you're also below the 7 a.m. open candle on the hourly, which is another key point. You're also below the 6 a.m. candle. We took a 90-minute cycle low, and below that 90-minute cycle low is a fair value gap. We tap into that. We have the turtle soup. We have the IFVG. We have the change in the state of delivery with this candle here. We have the breaker, and we have a fair value gap. The fair value gap gets violated, but I'm pretty sure if you look at ES right here, you'll probably see an SMT as well as here. I can't remember exactly, but I think either that is an SMT or that's an SMT with ES, just from my memory of the week. But anyhow, you also have the fair value gap down here, which remains open. So this is a valid trade for me. So we swept the 30 low, even swept the 90 low. We're below 7 a.m. open, we're below 6 a.m. open, and we form the order of reversal, okay? Any questions on this one? This one obviously turned out to be a massive, 250 point move. But for me, this is it. That's my TP. If I'm really confident or price is moving like it is now, maybe I'll just leave one on to run. But, from here to here, that's a solid trade. That's all you need, to be honest. Any questions here on this model, on that example, which is the wick? That is the 6 a.m. wick. Okay. And that's basically it, guys. It gets repetitive as shit after this. I mean, it's literally rinse and repeat over and over and over and over and over, and it happens over and over and over again. So let's go to the next example. We spent enough time here. So that's pre-market Friday. Let's go to here. All right, this is Thursday. Same thing, 6 a.m. So 6 a.m. opens somewhere over here. Sorry. Okay, and then we drop down below 6 a.m. price, down below 6 a.m. opening. And then, so we're only looking to long, okay? Only looking to long. We get below the 30-minute cycle. We don't really do anything, just keep falling, falling, falling. 30-minute cycle comes in. We get below the next one, doesn't do anything, doesn't do anything, doesn't do anything. Chop, 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 right here. Right there. That's the CISD for me, the way I look at it. And now I'm thinking bullish, okay? So we're also below the 8 a.m. open, okay? That's the 8 a.m. open. We formed the wick. We're thinking that's the wick, okay? That's the 8 a.m. wick. We want to be in on that. Same thing here. That's the 6 a.m. wick. Yeah, so we have the IFVG. We have the change in the state of delivery. We end up getting a breaker. We get a couple fair value gaps where you can pyramid into them. And then it hits the 6 a.m. open, okay? So this is another example where you're actually wrong. So we're wrong. This is not the 6 a.m. wick. but I like to have my eyes at the open price of 6 a.m. or 10 a.m. or whatever candle I'm trading, 2 p.m., and I'll look to profit there, okay? Any questions on this specific example? No, I don't. I don't wait on SMT. If it's there on the higher time frame, I'll take it. But um, really, where I really like to use SMT is on the continuations to keep me in the trade. Okay. Yeah. So if I'm watching both, I'm trying to see up here okay. So right here's a good example. We have this low, okay, and then we have that low. Okay, most people trail the stop to there. But really for this trade, you have a high here, you have a high here. What's the lowest low in between those highs? It's here, okay? But this was also an 8:30 news candle, so it's gonna be a little distorted. But anyway, I'll use SMT here. So say I have my stop here, which I actually did. I think I talked to Turbo when I was in this trade, and I showed him the picture. I was like, my stop's here, blah, blah, blah. It came back. I moved my stop. Okay, I moved my stop down back below here because there was SMT between this low and this low on ES and NQ. So I stayed in the trade and it ended up working out. I'll use SMT within a trade like that. Other than that, I'll use it on like the hourly, daily, higher time frame type stuff. But I don't need it for down here. Like I don't need these lows down here to be SMT with ES for me to get in, because I have so many other things that I'm looking for. As long as I'm below 6 a.m. price, typically below the hourly open price, and then we get what I like to see on the reversal, I'll get in. Any questions on that? So yeah, so from 6 a.m. I'm not really up at 6 a.m. trading, but I'll check in around the first macro window. So 6:45 to 7:15, I want to take a peek. 7:45 to 8:15, I want to take a peek. 8:45 to 9:15, I'll take a peek. But for me, I run a chiropractic office, so it gets a little weird during the week sometimes. So I just kind of take what I can get. But yeah, I don't want to be at the charts past 11:30, honestly, unless I just don't have anything going on. Like the majority of these trades will occur before 11:30. Like I said, the 2 p.m. open 4-hourly candle, that's way lower probability, but it does happen sometimes. Any other questions? Oh no, wait for 9:30 open? No, I used to. I used to do that, but sorry, go ahead. No, not really. To be honest, I haven't really collected stats on it. Definitely not 100%, like you'll see from Zusi, but it wins a lot. I will tell you that. It wins enough. It wins enough, but I don't have that. Any other questions on anything? Okay. It is. Yes, it is. Yeah, I'll have to send it to you guys individually through Telegram probably, because I don't have the Nitro feature. Yes. No. No. Nope. I'll use this candle right here, which becomes an order block. Okay. I'll use that candle if it has a gap. If it has a gap in it, it's got to have a fair value gap, and we have to inverse that fair value gap. And the breaker's the breaker. I'm not sure. Right. So I do. So I get your question. If there's like 3 or 4 black candles, they all have to be consecutive. So if there's this candle and then another candle and then another candle and they're all black, this will still be the CISD. If we reverse from that point. Let me show a couple more examples because I think that might answer your question. If we just pop up some more examples. Does anybody else have a question on this chart here? Yeah. Oh, okay. So here and here. Yeah. So here. So again, I'm below 6 a.m. This is where this saves you. This is where this right here saves you. Okay. That's what makes this so good. You're not gonna short below 6 a.m. Okay. I think maybe you missed that at the beginning, but that's not even, I'm not even looking at that. You know what I mean? Because I'm only long until I get above 6 a.m. price. So it's like a filter. You know what I mean? It's like a filter. If I'm down here, if I'm down below price, if I'm down below the opening price, I'm only looking for a long. That keeps me from getting into a short when we've already formed the wick. Like that puts you in the highest probability scenario to where you're gonna be in long on that wick and take it up higher. Yes, yes, the 4-hour open. That's in a picture at the very beginning that we went over, and you definitely missed that if you missed the first 15 minutes. But you'll see there's a little flow, like 4 or 5 bullet point flow that you go through on a checklist, and yeah. Yep, no problem. All right, next example. Can I move on from this? Any other questions on this chart? All right, same day, Thursday, 10 a.m. Same story, okay? 10 a.m. opens here. Let me get this stupid thing. So 10 a.m. open. All right, so nothing here. Chop, 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 chop. We shoot above, okay? During the macro, we start to show some volatility. We get above the 30-minute cycle high. Turtle soup, which this to me is the turtle soup. If we're above the 30-minute cycle high, that's a turtle soup. So like if we would have come here and then broken down, I'm still taking that. But here we do form a nice little high and then break. So we have another turtle soup. This might be another 10-minute cycle example. I'm not quite sure, but we have the turtle soup, inversion fair value gap, CISD here with the close of that candle. And then we also have a fair value gap, which this is the best. You want to see the fair value gap created either through the CISD, through the breaker, or down below if you're going to short, and then you can pyramid in. We're also at the 450 level. Okay, so that's something you want to see, 450 or 100 level. And we're also in a daily fair value gap, and we're also above prior day high. Like, this is as bread and butter as it gets, to be honest. Like, you can put max risk on this because there's just so many below 930 in the daily fair value gap, above prior day high at a 450 level. You get the pattern. You're above a 30-minute cycle high. I mean, you're above 10 a.m. open. You're above 11 a.m. open. You know, like, this is as good as it gets. And it just absolutely, yeah. I mean, that's a great trade there. Any questions on that one? No. Nope. This can be traded. Like I said, this can be traded regardless of your bias of the day. Like, you can form a daily bias, which I said at the beginning. You know, you can form a pre-bias for the day based on the previous day, and you can do it however you want. You know what I mean? You can have that bias, and you can just follow. Like, if that's what you see, and you still can use this framework. The main thing that I want to get across is that you want to be in the wick, okay? Like, if you're above 10 a.m. open, if you're above the opening price on that 4-hour candle, you want to look for shorts only. If you're trading at an actual reversal, because why would price reverse on a bearish candle below opening price? That's continuation. That's not a reversal. Same for this 11 a.m. open. You're above 11 a.m. open. You're not going to be looking for a reversal long. You're only looking for a reversal short. Did that answer your question? Any other questions on this particular one? Good. Good. All right, next one. Let's actually look at this example first, okay? I'm going to show you this example. This is a 1-minute chart, and then we're going to go into the 15-second chart, and it's the same trade, just zoomed in. Same thing here, 2 p.m. open, above price. Okay, we open. We're above the opening price. We're taking out cycle highs. We don't really see anything. 90-minute highs here, intact. We get up here at yes. So 3 p.m., 2 p.m. open, and we get up here, 3 p.m. opens, and we move higher. We're above 3 p.m., we're above 2 p.m. I'm only looking for a short, only. And we're at the 400 level. This is what I was saying earlier, like, we don't have to actually hit the level as long as it's in play. So they can form as almost like a barrier sometimes where price doesn't get to it, and then you'll rebound from it. So anyway, same thing here, above 30-minute high. And then this has the 10-minute cycles blocked out, okay? That's what those little tinier boxes are. So we get up here, we have the inversion here. We invert that fair value gap, and CSD occurs with this candle. So once that occurs, my high is here, my stop is there as well. And I'm trying to get as many orders in as I can without overdoing it on the risk, okay? So I want to get some orders in here at the breaker, at the change in the state of delivery, or if it taps back up into that fair value gap here, it's super tiny. Okay, then price sells off. Go ahead. Yes. Yes, you can. You can enter there. It's not as high probability. Not even close. You'll lose a lot of trades. But it works. But you will lose way more trades than if you wait until this. Once you get that candle, that's way higher probability. I mean, Tuesday I tried to go, on the inversion fair value gaps only, just testing something out. I lost way too many trades. So I know for a fact this is way higher probability. And honestly, don't rush it. There's no reason to rush it because you're trading a reversal. So there's plenty of time after we form this reversal to get in, okay? You can get in anywhere along through here because you're not even back to the opening price yet. That's first target, okay? Once you get below the cycle low, that's the first target, okay? First target is here. Previous 30-minute cycle low would be the first target, okay? So from here to here, that's target 1, target 2, target 3. 90-minute cycle low would be the ultimate target. Yeah. Anything else on this one? Well, it actually is, but I understand what you're saying. I don't use that because I did used to do that, and it was just I had too much. I had too much of this going across my chart. Too many of these. So actually this one is. So that's what we're going to see when we zoom into the 15-second. This low right there dips into the fair value gap, makes it high, closes below. That's a whole reversal in itself. But as far as this goes, you're correct. That's not into a gap. Yeah, I don't really, a lot of times my trades do have that in it when I look back, but it doesn't have to. It doesn't have to be in the gap. Any other questions on this chart? I'll enter one here. So at the close of this candle, I'm in. And yeah, I could get in here. I could get in here, any candle. Okay, after the CSD, because as long as it's within your risk, okay? You gotta, whatever risk you risk is whatever, that's up to you guys. But yeah, I'll enter on the close of that candle. Yeah, I want that. Yeah, I want that. So I can add in, like if you get this CSD and you enter and then price comes back up on you and then starts to break down again, form some fair value gaps, and then it gets down back below the breaker. I mean, you can add in, once you get a couple more confirmations, you can add in a few more positions, okay? While maintaining the same amount of risk. And then really, once you get below, then you can really add the positions, okay? Then you can add right here. When you tap back into that fair value gap and then you close down below, then you can drop your stop back down to here, and you're risking nothing, but you know, you're going to make 3 times the amount, or however many positions you put on. I'm confident enough to, when I see that candle close, my stop stays here, and anything in between the change in the state of delivery and my target, I'm willing to get in, and I'm willing to also take that loss if we just go hit the high. Like, you know what I mean? If it doesn't work, because it works enough, and the risk reward is high enough to where it just doesn't matter, you know. Any questions on this one before I zoom into the 15 second? All right, let's go into this one, which I don't recommend, really. Like, you don't need to do this. You can do, yeah, you don't need to do it. You can have plenty of trades just from a 1 minute chart. Happens multiple times a day. Anyway, this is the same exact trade, okay? Nothing's different. The only difference is it's a little more clear at the very top. So, same thing happens, turtle soups, blah, 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 everything we just talked about. We get the fair value gap here, and we close it with this candle. Okay, so we have the turtle soup inversion. Now we're looking for the CSD. We get it with the same candle. Okay, this candle confirms the CSD. We get below the breaker, and price just keeps going. Okay, you can pyramid. This is just the 1 minute. The same thing we looked at, I just left it on there. Okay, you can pyramid and just let it go. And then look, I mean, this is a 10-minute cycle low. Okay, that can be your target, and you can be done. You know what I mean? Like, that's 53 handles just to here. You know, you get in here, you get out, and you're done. Wait for the next one. I mean, that's $1,000 if you're trading one contract, one mini. Yeah, I mean, there's not much to this one. I just wanted to show you the fractalized nature of it in a 15-second chart. Any questions on that? Okay. So it's not that I'm relying on the cycles with the 15 second. Like, I'm not zooming in and looking at the 10 second. When I go into, I'll go into the 15 second if it's not clear on the 1 minute. So if we have extreme high volatility and like price doesn't form a gap, like if we have a large candle and it's looking like it could reverse if we're above a 30-minute cycle high, and the 1 minute just doesn't have what I would look for as far as the inversion fair value gap, that's what I'll zoom in for. I'll zoom in for the IFVG, okay? So, yeah, so I'll show you. So you see the IFVG there. So if we look at the previous example, you don't have it, okay? So I think this is the one. So we have the IFVG on the 1 minute, okay? But what I see is price tapped that fair value gap, made a higher run, and then is working its way down. So at this point, I'm like, oh, okay. That might have something between here and here that looks like my model. So I'll zoom in real quick and see. If it looks clean, I'll take it. And it just gives you a little earlier entry, which is not always best, but that's the reason for me zooming in. It's just to see something I can't see. Um, okay, 15-second. I think I have maybe one more. No, I don't have any more actually. And I mean, look at that. That's 2 days. I mean, I didn't go too far because it just you can have a million examples of this. But that's Friday, Thursday. Like this is what is that? 1, 2, 3. That's 4 trades between Thursday and Friday. Just you know, based on what I showed you here, and they're all winners. So I mean, I don't know. The big takeaway is just be in the wick. Okay, if you're above the opening price of a 4-hour candle, only look to short. If you're below, only look to go long. Okay, this is for you guys who missed the beginning. This is the trade flow or whatever little analysis I'll go through when I'm looking at the chart. Yeah, you can screenshot it. And that's it, really. You're just trading the candles. Don't get caught up in like, oh, I need to catch the move of the day. I need to, like, who gives a shit? Trade the candle. Trade each candle. You know, trade if you're gonna trade the daily candle, trade the daily candle. Go long below the daily open. Don't be going long above the daily open expecting that to be a reversal. If you're trading reversal, you can trade continuation differently, but we trade reversal. So if you trade reversal, you should only go long below an opening price, and you should only go short above an opening price. That gives you the highest probability to be successful. I mean, it just logically doesn't make sense to go for a short reversal below opening price. That's just, it's called a continuation. So I don't know, guys. I mean, this is Zusi has really good stuff. Don't get me wrong. But you can tie all of his stuff into this, and this is his stuff, really. I just think he doesn't break it down as. But I know he's looking at this because he's taking these same trades. He's taking these same trades. Yeah. Good. I'm glad. Oh, you can. Yep, you can do the same with the 1 hour. For me, I just don't. Like I said, I like to tie the 1 hour into the 4 hour. Okay. Where's the actual chat question? Got it. You can do this also with 1 hour. Yeah, you can. You can. Yeah, you can for sure. I just found that the 4 hour the 4 hour is a good filter. The 1 hour candle, a lot of times those 1 hour candles, sometimes they don't even form a wick because you're already into a distribution. You know what I mean? You've already formed the reversal and you're just tagging along on the next hour and you don't even get a bottom wick. It'll just take off. So it's less likely to happen in a 4 hour candle. Like you'll typically get a wick in a 4 hour candle as opposed to a 1 hour candle. A lot of times you'll have a 1 hour candle that just takes off, and you guys have all seen that. There's no wick, or at least not enough wick to form a reversal to where you can visually see it and get into it, unless you're down in like the 5 second. But that's just, you don't want to be doing that. Yeah. Yeah, for sure. Yep. I'll definitely look at the news. Like So really, that just kind of determines when I'm going to be looking at the chart more. Like if there's an 8:30 news release, I'm probably not taking a reversal between 7:45 and 8:15. I mean, I know I showed you an example where it does work out, um, where we have the 8:30 news, but um, it's like here, it does work out. Okay, we have the 8:30 news, but I don't typically like to hold on through that unless I'm really 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 confident. Because if you're really confident in it, like the news won't take you out if you're in at the right spot. Um, but yeah, but like on an 8:30 news day, I'm looking maybe 6:45, 7:15. But this 7:45 to 8:15, it's a little sketchy because you never know with those wicks. Um, like you do, it's more of a confirmation if it's also above a line. Yeah, right. Yeah, I use it as a confluence confirmation within the 4 hour framework. And it's, yep. Go ahead.